Hey guys, welcome back to the Free Life Agents podcast. So today we have a guest who is actually a specialist in almost a different field of real estate and really going to offer us a different, fresh perspective on real estate, not just for real estate agents, but also those of you out there who are investors as well, looking to invest in real estate. So my guest today is Paul Airy, and he is a specialist in commercial real estate and commercial real estate investing right here in my home state of Texas. And really grateful to be connected with you, Paul. And, thank you for being on the show.
Thanks for having me on. Very glad to be here.
Yeah. No, super grateful that you were able to, accept my offer of being a guest on the show and offer us kind of a perspective into a field of real estate where I don't have much much experience or knowledge in. But for those of you who don't know who Paul is, Paul, would you mind kind of introducing yourself and your background in real estate, how you got into it, and what you're kind of working on now?
Well, I was in it a long time ago as a general contractor. I built houses and got into that for quite a while and went into more technology-based businesses. But about 11 years ago, I got back into real estate, became a broker, and also did some general contracting and developing. Only instead of houses, it was commercial properties, industrial properties. And so I've been doing commercial real estate now for about 11 years. And about the same time I started as an agent, I also started investing again. So I work mostly with investor clients. A lot of the work I did, I worked out in West Texas. That's where I got started as an agent and a broker. In West Texas, you have a lot of energy related companies, just like you do in Houston. And so most of my clients were in that industry. If they weren't investors, they were oil companies, oil and gas service companies. And so we had a lot of companies buying their own properties, but mostly those properties are owned by investors, and I dealt a lot with those investors.
Wow, awesome. So when you were a general contractor in the beginning, were you kind of in the residential space, or was that
Yeah,
more
yeah.
was
In the
residential?
beginning, it was just residential. I built spec houses. I never did houses for people. I would just build the house and finish it and put it up for sale and sell it. And that's how I did that. Um,
Yeah.
and that's actually how I got attracted to commercial real estate, because in residential real estate, people are a lot more emotional about their purchases, and even investors, they're not nearly as emotional as a home buyer, but they are a little bit. There's something about buying a house. Everybody grows up in a house. It's your comfort zone. That's what you know. So, but in commercial real estate, investors, they really don't have much emotion. At least the successful ones don't. They get out their calculator. If the numbers work, they'll buy it. If it doesn't work, they won't buy it. Pretty simple.
Yep.
Yeah.
And that's I think that's one of the things that we were talking about, earlier when we first got connected, is the, kind of like the difference between, working in residential and commercial as well. And, for those that are kind of like, they're not really familiar with, the commercial side of things in terms of investing in real estate, you've been on both sides of the fence. So when you first started out, as an agent working, did you just jump right into commercial real estate, or were you kind of piggybacking
I've
off that?
never, I've never listed a house, never sold a house. Always been commercial.
Yeah.
Never even. There were a couple of times when I was tempted, but I stuck to commercial and just stayed with that for all these years. Sometimes the commercial and residential markets are kind of opposite of each other, especially in the market I was in. And it was always tempting to jump into doing houses when the commercial market went down, but I didn't do it. I stuck with it, and I'm glad I did, because so many less headaches doing commercial properties. Most agents feel like commercial that scares them for some reason. It's just because they haven't done it, and nobody's taught them how to do it. There are a few residential agents that do commercial, and they do just fine with it. Once they do one, they realize that it's easier to do than the residential deals. And those are the agents you see that keep doing the commercial over and over. But yeah, once you get into it, you realize it's really easier than residential properties.
Yeah, and it's interesting that you broke into commercial real estate essentially in the very beginning of, kind of jumping back into the sales side of things. And from just my limited knowledge, I understand that a lot of, new agents or brokers starting out in commercial, they like to work either as some sort of an intern or under an apprenticeship or a mentorship program. Did you kind of jump in with like as a part of a team, or did you come in on your own learning?
I've never done a team. I don't like teams. Uh, Maybe I should say a little more about that. Some of the teams I've seen, some of them are great and they're good for people, and especially new people. Some of them, though, kind of take advantage of some of the team leaders kind of take advantage of the people on their team, and they feed them all the crappy leads, and they take most of their money basically, and don't give them much for it. And that's why I kind of have a bad taste for teams. I've stayed away from them, never have done those. So when I got in, I went into a brokerage that was 100% commercial, no residential. And there was a guy that was working in there. He was in his 70s, and he'd been doing commercial real estate for about 22, 23 years. And he did all the broker price opinions, and he was covered up in broker price opinions, really busy. And all the banks in town would hire him anytime there was a commercial deal and they're financing less than $250,000. They'd get, instead of doing a $3,500 commercial appraisal, they'd hire him to do a $500 price opinion. And so he was very busy with that. And I had the chance to share his office with him. They asked me which office I wanted to be in, so I picked him. I picked his because he'd been in it the longest, and he knew all the lenders in town, and he really taught me a lot. So that's how I got into it. I mean, he didn't even ask for anything in return. He just helped me, just taught me.
Wow. So I mean, and I think that's a really good segue into what I want to ask next. Is that I'm sure there's a lot of people listening to this right now, or at least a few, who, they want to get into commercial real estate, whether they've been an agent for a long time or they're brand new and they want to just jump into commercial like you did, right? Whether, whatever investing or real estate experience they had or not had, essentially. And so from your perspective and your experience, how would you suggest somebody, who's newer or somebody who's never had, experience in commercial kind of jumping into being a commercial agent?
It really kind of depends on who you're working with, what brokerage you go to work for. I would just suggest you just from day one look for one that's going to let you do that. It's going to let you start in that. If you're already an agent and you want to get into it, you just need to start. You just need to build relationships with the people that are doing commercial properties and learn from them. Basically, I mean, I get agents all the time that call me. I don't even work with them, and they call me for help on commercial deals. They're residential agents and they got into a deal and don't know what to do with it, or maybe it's might not be their first time, but maybe it's a different type of property that they've never dealt with, and they'll need help with things like how to list it, how to describe the property. I've seen industrial properties listed, and I could tell it was a residential agent that was listing it because of how they described the inside, just like the way they describe a house. They have this lovely office and 3 rooms and 2 bathrooms, and in an industrial property, the important part of the property might be the shop that's out in back, or the yard that they have, and they don't even have pictures of those. All they have is pictures of the office and pictures of the front. And So things like that, little things like that, they need help with that. You should always try to find somebody that's in that business already that can help you. And most of the time, they're going to be willing to do it.
Yeah.
Doesn't cost me anything to help somebody, so I just do it when they ask.
Yeah, that's a that's a great mindset to have. Just a kind of side comment there. I think that's an awesome mindset that you have, where you're willing to give up some of your time, right? I guess that would be the cost, is some of your time to help out a
Yeah, some of my time, but it's a phone call. It's not
right.
it's not like I'm spending a week with them or anything.
Right. Yeah.
So
So, I mean, and this is interesting topic. I think when we're talking about, we just mentioned something interesting there was, real estate agents who are essentially, you can understand that they're listing as a residential agent, right? Just from their listing descriptions, right?
yeah,
So for people who don't know the difference, or they know that there is a difference but don't know what it is, or what are some
yeah.
of the key differences between commercial and residential real estate and how to work it as an agent. Would you like mind explaining like some of the key differences between the two, while you're working as an agent representing somebody, and then later like kind of talk about like what is the difference on the on from an investor's perspective as well.
Well, when you're listing a residential property, it's all about the cosmetics, and it's about you're selling somebody a home that they're going to live in. And in commercial, you're selling somebody a building they're going to work in, or they're going to own it as an investor. So they, a lot of times, the way a property looks for a residential buyer is more important than it is for a commercial buyer. The commercial buyer probably is going to have in his mind that he's going to have to spend a certain amount of money on this property to make it what he wants it to be. He's more interested in the location, the traffic flow, um, and it's, I mean, it's all about, it's either business or it's not business. Those are the two differences. With a residential property, it's all about business, and it's the more the financial aspect of it. What's my return going to be on the property? Um, in residential or in commercial properties, you're going to get more um, tax benefits than you will from residential, and your overall return on the property is you have more control over the equity in a commercial property. So all those things, if if you're just buying a house, basically all you're worried about is, am I going to like living in it? Is it going to be a money pit or not? And how much value is it going to gain? But you're not generating cash flow off of that unless you're buying it to rent to somebody. Uh, and that's the big deal. I mean, in commercial properties, cash flow is the number one thing if you're an investor. And cash flow is very important. If you don't have any cash flow in a property, you're not going to buy it. But not true with residential.
Okay. Yeah.
Uh,
And
and if you're an investor buying the property, um, uh, you have the cash flow, but you have some other things. You have the depreciation on the property. You have how much is it going to appreciate? Are you going to be able to raise the rent and lower the expenses? And in commercial properties, the value of the property is based on the amount of income it generates. In a residential, it's not. It's based on the surrounding property values, the comparables in the neighborhood. And in commercial property, you can control your equity by increasing your income on the property. So you can increase the value of your property artificially just by increasing the income or decreasing the expenses. So
just
it's that's what makes it a lot more fun to buy a commercial property. I mean, even if you're buying a residential property as an investment to rent to somebody, you have no control over the equity. That equity is still going to be based on your neighbor's property values. It doesn't matter if you double or triple the rent, it's still going to be the same. But in a commercial property, if you double or triple the rent, you're going to greatly increase your property value and your equity,
Wow.
which the banks will recognize that. They'll actually loan you back that equity that you gained. So it is worth something to be able to do that.
Oh yeah, I think so as well. And
Mhm.
that's super interesting you mentioned that because I'm curious, like, so when you're talking about somebody who owns a commercial investment and they're able to just raise the rents, I mean,
Mhm.
I'm sure they're not just, they can't just randomly raise the rent by like,
No,
right, like there has to be some kind of baseline there, right? Like, so how does somebody determine that?
well, I mean, it depends on your lease. So let's say when you first write a lease, you're going to want to write in a rent increase at some point. You can't just increase it during the middle of the lease unless it's written into the lease. Sometimes you'll write in a rent increase every year, maybe an annual rent increase of 2% or 3%. Sometimes you'll do it every 5 years, like when the lease is up in 5 years, and you give them a renewal option, and then the renewal option, of course, is going to increase, and it'll be a bigger increase, like 10% or 15%. Um, so those are the times you can increase the rent. Also, if you buy a property, and there are a lot of property management companies out there that are not really very good at what they do. And I've seen a lot of properties, large multi-tenant properties that are managed by companies that weren't keeping up with the leases. Sometimes they'll let the tenants let their leases run out, and their tenants are just paying month to month, and they haven't raised their rent. And if you get one of those properties and the tenant's paying half the market value for their lease, and their lease is up, then you can raise. That's a good time. You could raise the rent right away, because if they don't have a lease, if they're just renting month to month, you can raise that rent immediately. And usually those tenants know that their lease is up and they're skating by on a cheap rent, and they realize when this thing sells, somebody's going to buy it and they're going to raise the rent. And so they know it's coming. They're not stupid, and they're not going to get too upset about it. They may not like it, but they've been getting by for a while. And so those are the kinds of those are the usual times that you can raise the rent.
That's interesting. So how does, I guess, if somebody was an investor, let's just say if I was an investor and I wanted to look for a property, an opportunity essentially that you just mentioned, right? Somebody who's kind of
Yeah,
skating by,
yeah.
what is something that I can do to actively look for those types of opportunities?
Sometimes there are signs when you see the property. I'll give an example. There was a retail center that we had sold, and well, our company represented the buyer actually, and it had been mismanaged. And you can tell when you see the property. It was an older property. It had deferred maintenance. They hadn't been keeping up with the maintenance. There were things falling apart on the building. You could see it. I mean, the parking lot had potholes, and the building, parts of the building needed paint, and some cracked windows. And when you go inside, you look around and you notice the ceiling tiles may have stains on them, which might indicate a roof leak or an air conditioner problem. And so little things like that, you kind of know. And then you just check, when you're negotiating with the seller, you ask to see the leases. They're going to have to show you the lease at some point. And when you see that the lease is past its renewal date, then you know for sure. But if you see a building like that, that's a pretty good sign. There's probably a pretty good chance that some people are in there not under a lease anymore, that they're going month to month. That usually
Okay.
means there's a landlord somewhere. He might live out of state, or he might be getting too old to keep up with the property. Uh, the management company's just charging him money and not doing anything because they know he's not ever going to come by and look. And unfortunately, there are management companies like that. They'll do that. So the first thing you do when you get one of those properties is you fire the management company. Get somebody else or do it yourself.
Yeah.
But yeah, there are always telltale signs. And one of the best things to do is just find a broker that knows the town and knows knows the market, knows the commercial market, knows the business. Somebody that specializes in commercial properties,
Yeah.
and they have access to that. They'll know, basically. They kind of know who owns what and who's managing what.
Right. And I think it's, people shouldn't be, right. Always say like work with a broker, work with an agent, right?
Yeah,
Yeah.
yeah. That's one of the things I teach people. I've created a course in real estate investing, and one of the things in there is building relationships, and especially with brokers, you need to build relationships with agents and brokers, and that's how you're going to find a lot of your properties. I mean, there are other ways. It's not the only way, but that's one really good way to find properties
Yeah.
and to
And
know what's going on with the property behind the scenes.
right. And I'm sure people who just listen to this are asking themselves this question right now. And this is something I'm curious about as well is, we understand on the residential side of real estate,
Mm-hmm.
if you're an investor, you want to work with an agent. Usually there's no commissions for the buyer side, unless if you were, buying something off market. And it's usually, I mean, this market, who knows, right? But usually it's 6%, on the listing side. For a commercial real estate transaction, how does the commission structure kind of play out? Is it similar or a lot different?
It's almost exactly the same as
Wow.
residential. It really is. It works the same. Um, One exception is leases. We get paid full commissions on a lease. We don't get paid. If I write a lease, if I lease a space for somebody, we're going to get our commission is going to be 6% of the lease amount, the gross lease amount. So that would be, say, if somebody leases a property for 5 years, whatever total amount of rent they pay over the 5 years, your commission is based on that. So if you have somebody that's paying $100,000 a year in rent, $500,000 over 5 years, you're going to get 6% of 500,000, and you don't have to wait for a closing. So it's kind of nice. They sign the lease, they write the check, and you get paid. There's no 30-day or 60-day closing or 90-day closing or whatever. It's right away. As soon as they get it,
Wow.
as soon as they sign that check and sign the lease, you get paid.
Wow. So you're getting paid up front before even the 5 years, right? So you're getting paid up
Yeah.
front.
Oh yeah. Yeah. You get paid up front. Right.
Wow.
Yeah.
Yeah, that's
Yeah.
much better than
Yeah.
no, a
Now
lot of
there may be some concessions in there, like if the tenant defaults on their lease halfway through or something, you may have to go back and find them another tenant. And so whatever, you're still going to get paid again, but you're going to deduct what they already paid you for the first half of the lease. So yeah, so well, you may end up getting, if you sign a new lease that's longer, I guess is what I'm saying. So if you go halfway through a 5-year lease and the tenant defaults, and you come back in with a new tenant with a 5-year lease, so you got 2.5 years there that you're going to get paid on.
yeah. Okay, well that makes sense. So from what I just kind of heard, being a commercial agent or a commercial broker is a lot more of a almost like a long-term, consultancy or a long-term, somewhat of a
Yeah,
management.
yeah. I mean, for example, some contracts, most commercial contracts for a purchase, uh, they get stretched out over a lot longer than you'll see in residential. You'll almost never see a 30-day closing in commercial. Usually it's going to be 45 or 60 days or 90 days, even longer if the property's bigger. We have commercial contracts have a feasibility period, which is the same as due diligence period. And that's where the buyer can go through his due diligence, get the commercial appraisal done, get the environmental study done if it's required, and it usually is. So that's another thing you have to deal with commercial that you don't with residential, but it's not a big deal. And all the things you have to deal with the city, with zoning ordinances, and making sure that you can do what you want to do with that property, that kind of thing. So stretches the contract out a lot longer, but you know, it is harder to get started. But once you get that ball rolling, though, you know, you have this contract starts and it's 90 days, and you have another one start and it's 90 days. So you eventually get to where you have like every couple of weeks or every 4 weeks or so, you have a contract coming up to close. So you're not always waiting necessarily, unless you just don't sell a lot of properties, which.
Yeah, and you mentioned something in there that I kind of want to touch on, and that is, you know, you mentioned that for the, you know, like for the due diligence period, essentially for the commercial, the feasibility period, they're doing a lot of, I'm guessing they're doing a lot of different things than what a residential buyer would be doing, right? So the terms are a lot different, and I think that's one of the things that makes being commercial agent easier. Is that what you would say as well?
Well, I don't know that that's what makes it easier. What makes it easier is the lack of government regulation. Unless you're dealing with apartments are commercial properties too, if it's 5 units and above. If you're dealing with apartments, you still have the same regulations you do with houses, the Fair Housing Act, those type things. But in commercial properties, you don't have that. You don't have a lot of the disclosures that you have in residential. And the paperwork, believe it or not, is usually for the agent is easier in a commercial contract, in my opinion. And I remember when I sold my house in West Texas and we moved to Austin about a year ago. I just, because I don't sell houses, I had a friend of mine list it and just let him sell it. And he kept handing me one document after another, you know, oh, you got to sign this one, you got to sign this one, you got to sign this one. Gosh, how many do you have? And you know, with a commercial contract, it's so much simpler. A lot of that's on the buyer, and I mean, you still have to make disclosures if you have issues with the property. If there's a problem with the property, you're still required to disclose that. But the paperwork you have to go through, don't have to have the lead-based paint disclosure thing. You know, you don't have to have that notice that you give to somebody, because nobody's going to live in the property, right? So that's not necessary. Now, if you're going to do renovations, you know, you have to test for that, and you have to test for asbestos and some things like that. But that's between you and the city, and that's got nothing to do with, it's between the buyer and the city, and it's not really the agent's responsibility there. So
yeah. And when it comes to doing a contract for commercial, I know in residential, I mean, it's going to vary by state, but at least here in Texas, I know there's, you know, essentially boilerplate contracts that everybody can use. Does that kind of exist in the commercial space, or like you said, the buyers are the ones that are actually getting their lawyers?
What was that question? Say that again.
Oh yeah, I said that. You know, in residential, because there's a lot of, I mean, it varies by state, but in the residential space, there's a lot of boilerplate, you know, contracts that agents can just fill out, right? And buyers can just fill out to accept the offer. In commercial, does that exist in any form, or it does? Okay.
Oh yeah. Yeah. There's basically they're the same, well, not the same, but the same idea as residential contracts. You know, the ones that you sign for houses, we have, instead of the 1 to 4 family house contract, we have a commercial property contract and commercial property purchase contract. We have the basically all of the contracts have the word commercial in them. So there's the commercial exclusive right to listing and commercial lease contract, and you know, but they're basically they're all done for you. We have TREC contracts that we use, and you know, the TREC promulgated documents, and then we have the ones that are available from the Texas Association of Realtors. Yeah, and basically we get them out of the same pool that the residential contracts come from. If you scroll down the list, you'll come to the commercial, all the commercial stuff. And the best thing to do is just go scroll through those and look at them, read them.
Yeah.
That's the best place to get started. And if you're an agent wanting to do commercial, just go start reading the contracts.
Yeah.
They're pretty simple. So
And kind of moving towards more in an investing direction,
Mhm.
right?
Good.
Something, yeah.
This is my topic.
Right. Yeah. And I wanted to say is that you also have a podcast called, the real estate revenue
Mhm.
podcast, right? Yes. And one
Right.
of the things
Yeah.
that I heard you say in one of your episodes that was really interesting, I want to kind of bring up and quote here is that, you never invest in anything that people live in. And one of the,
Personally, yeah. I
yeah,
personally don't do that.
mhm,
Yeah. Yeah.
yeah.
You
Yeah. I
want to
mean,
hear
could
about
you,
that?
yeah. Could you elaborate on
Uh,
that? And because I know you help a
well,
lot of,
it's because of regulation for one thing, and it's a little more of a headache to deal with tenants who live in a property. Uh, but the biggest thing is residential properties that you rent out, that you invest in, uh, do not have triple net leases. The triple net lease is where the tenant pays the property taxes, the property insurance, and for all the maintenance costs on the property. So when you have like a retail property or an industrial property, even some office buildings, you can do a triple net lease and they're paying all your expenses. So the landlord has very little responsibility for expenses. And that makes it easy to manage, and it makes it easy when you go to sell that property. Investors are looking for that, and that makes it uh, much easier to sell the property.
so I
So
didn't know that. That was, that's a,
that's a huge, huge difference.
yeah, and it is.
Yeah.
And one of the things that you help or you talk about a lot is, retirements. And there's a, you mentioned there's a
Yeah.
retirement crisis essentially, and how you're helping. Could you explain a little bit more on how you're helping people with their retirements through commercial real estate versus what a lot of people might think when it comes to real estate and retirement is, invest in houses, right?
Yeah. I'm glad you asked that because you've just opened up a huge topic. So right now in the United States, well, we have, I don't even know how many baby boomers we have, but there are 10,000 baby boomers retiring every day. And there's a $14 trillion retirement deficit. That's huge, 14 trillion with a T. Uh, and just with pensions, uh, company companies that provide pensions and like state government and city government entities that provide pensions, they have a $1 trillion shortfall. And I don't know that that's a problem we can actually completely fix ever. I think what's going to happen is we're going to have a bunch of bankrupt retirees at some point. But I can help as many people as I can with, with that problem just by buying real estate. So the cash flow from real estate can replace your retirement plan. And if you have a 401k or pension plan, the chances are it's not going to be enough to retire on. So if you think about this, if you're an incredible saver and you've saved up $1 million by the time you retire, and I don't know anybody who's done that. I hardly know. I bet you probably don't know anybody either. You might, but um, financial planners will tell you to, and this topic gets a little boring, but financial planners will tell you that you should withdraw 3.5% of that savings every year to live on once you retire. So what does that do? First of all, it's only going to give you $35,000 a year to live on. And if you
Not a
haven't paid
lot.
taxes, no. And if you haven't paid taxes on that, like a 401k, you're going to have to pay taxes. So you're going to end up with out of about $2,900 a month, you're going to end up with about 2,500 maybe a month to live on. And you've got to hope that you die in 25 years because that's when your money runs out. So, whenever you retire with $1 million, you better plan on dying in 25 years or finding some other way to make some money. Now, if you take that same $1 million and you buy an investment property and it pays you an 8% return, which is pretty normal. It's what I teach people to do. It's what I advise people to do. 8% is pretty easy to attain. I can even go up to 8, to 10 or 12% in some cases. An 8% return is $80,000 a year. So you've more than doubled your income just by putting that money into an investment property and collecting rent. Not only that, it's going to save you taxes, huge amount of taxes. Because if you can show that you spend more than half a year, so I believe it's 750 hours a year on real estate, you are designated as a real estate professional, and your income from real estate is taxed at a much lower rate. And you can even have that take out some of, if you're still working somewhere, you can even have that take out some of that tax too. So you can even save money on that tax. You're also going to build equity in the property. If you're just taking money out of your savings account, that asset is depleting. It's not increasing. So you're going to run out of money, but you're not going to run out of money with a $1 million property. So if you bought a $1 million property and every 5 years you raise the rent 10%, in 15 years your income is going to be over 100,000. You're probably going to be around 105, 110,000 a year, and the value of your property has just gone up quite a bit too. It's probably gone up. I don't have a calculator in front of me, but probably gone up to maybe start off at $1 million, maybe 1.3 million, somewhere in there, 1.5 possibly. So that's why I preach to people, stop investing in 401ks and put it in real estate. Personally, if I had a 401k and I didn't have a lot in it, if I had $150,000 or $200,000, which is what a lot of people, the average of I think the average 401k for 64 or 65-year-olds is about $150,000, which they're not going to get to that $1 million. I would just take that out and pay the penalty. I mean, that's what I would do. I'm not advising people to do that, but I would just take it out, pay the penalty, go buy some real estate with it. Yeah. If you're 40 years old and you've got that much in a 401k, that's what I would do. Because by the time you get to be whatever age you want to retire at, you'll be a lot better off if you bought real estate.
And I mean, this kind of issue that you're running into, I mean, do they just not know? Are they just not doing the math that you're doing? Or
right, they're not doing the math, and I don't know. This is such a big problem. I mean, $14 trillion retirement deficit, that is such a big problem, and nobody is talking about it. It's so bad, and there's so few people talking about it that I occasionally have to go back and check my numbers again just to make sure I haven't made a mistake somewhere and I'm talking about something I don't know anything about, but every time I check it, it's true, it's correct. And I have a book, if I show it, it'll probably show it backwards on the screen. It's Who Stole My Pension by Robert Kiyosaki and Edward Seidel. And
showed up, right? Yeah, Who Stole My Pension.
Oh, okay. Edward Seidel is a former SEC attorney, and he investigated crooked pensions. He still does. He doesn't work for the government anymore, but he investigates crooked pensions or mismanaged pensions, I guess is a better way to say it. And he uncovers a lot of theft and mismanagement and just pensions. I mean, $1 trillion pension deficit. That's a lot. That's a huge amount. If you work for the state of California, or they're one of the worst ones, and certain cities around the country, county governments, city governments, you really need to check what your pension's investing in, because there's a good chance that it's not going to be here in 5 years. Your pension plan could go broke in 5 years.
Okay.
And 401ks aren't much better. I mean, they're you are dependent on whoever's managing your 401k fund. You're depending on whether or not they know what they're doing, or they're investing in the right products, or that the companies they invest in don't go broke for some reason.
Right. And that's kind of what I wanted to touch on
Yeah.
I mean, maybe you don't have like knowledge of this, but if you do, would you mind sharing it? Is you mentioned that there's a lot of people's pensions they're investing in certain things that they don't even know, what their pension is investing in, and it cannot be here in 5 years.
Exactly.
So, I mean, do you know what some of those, what's like some common things that, pensions are being
Well,
invested in?
they invest in stocks, in mutual funds mostly,
Hmm.
and what happened in 2008 in that real estate crash, and a lot of companies went broke, a lot of people lost their jobs, and their pensions or their 401ks, a lot of people lost half of their 401k back then, and some people lost all of it. But that would be pretty devastating. And financial planners are not going to tell you about real estate. They will not, and it's not because they're not mean. They're not doing it to be. Uh, they don't tell you because they're not allowed to, because the people they work for, if they have to sell a product that company gets commission or a fee on, and they don't get anything off of real estate. So they're not going to suggest it to you. But I have some investor clients who are financial planners, and they all invest in real estate. They all buy commercial real estate. And when I asked him about that, I asked him a few months ago, I called one of them up and I said, why don't you ever tell your clients about real estate? And he said, well, I'm not allowed to. I can't. So, when I talk to people and I tell them, that they need to invest in real estate instead of a 401k, and they say, well, my financial planners would tell me that if I needed to do that. I said, and now I can say, well, no, they don't. They won't tell you that because they aren't allowed to.
So, I mean, that's a
So,
pretty powerful statement there, where the financial planners
yeah,
themselves are investing in real
yeah,
estate.
yeah. And people don't know that. They don't realize these financial planners buy real estate in a big way. It's not just, I mean, these guys, I have two clients who are financial planners, and they have multi-millions of dollars worth of real estate, commercial properties. So it's not just a sideline investment for them. I mean, it's a big deal for them.
Oh yeah,
So
yeah. And for those people who are, I guess, because I'm not too familiar with this topic, but I do know that maybe you can kind of shed some light on this as well with some what you know, but people who invest in 401ks, a lot of them, they have company matched 401ks.
yeah,
So I mean, for
mhm.
them, it might be a little bit more lucrative, or they just feel like it's safer or more stable that they get a match from the company. I mean, do you have any comments, or how would you respond to that potential
Yeah,
client?
doesn't matter. Doesn't matter. Um, so think about this. In 1997, I think it was, they told financial planners, and these are some of the big ones, the big financial planners, were telling their clients they needed $150,000 per couple to retire, to live on. Today, it's 1 million to 1.7 million for a couple to live on. And like I said earlier, I don't know anybody who's been able to save that kind of money. I mean, I know people that make $500,000 a year, and they're nowhere close to saving that kind of money. Uh, and it's unfortunate. I mean, that's got more to do with what they do with their money than it is with, you know,
Right.
their but they just don't save anything, or they don't invest anything. They own a lot of stuff, but you know, they don't have any investments. Um, and half of the baby boomers, 50% of baby boomers say they plan on retiring, just living off their Social Security. Well, Social Security checks, the average Social Security checks about 1,300 or 1,400 a month. And so far I've known two people that have done that, retired and decided to live off their Social Security. And one of them went back to work in less than a year, and the other one's, he's too old to go back to work, but he's not living too well either. So, um,
Yeah.
it just
Yeah.
doesn't work.
Yeah, it doesn't. And I think I've done the math in terms of from the agent's perspective, right? Because one of the things that we do with with the blog that I write is that we kind of teach agents how to financially plan. And because real estate agents, they're even in a worse position where they're just making commissions, right? They don't have they don't even have the bad 401k plan, right? Sometimes it's just up to them. So we've done the numbers on that, and it from kind of piggybacking off of what you said and the stats that you used as well, is somebody making around $100,000 a year needs to be living off of close to, I think, $4,000 a month, which is not a lot. And then that way they're able to save like that goal of $1 million in their retirement, and it takes them about 40 years to do so, and they're living off of even less money. So
but by the time they get that much saved, it's not going to go as far.
Right, it's going to be worth less.
Yeah. So to me, the key thing is cash flow. You want the cash flow. And the thing is, when you buy a property, if you buy it now, don't wait till you retire to buy it. Buy it now, because the cash flow starts now. You don't have to wait 30 years for it. So buy it as soon as you can buy it. And take that cash flow. If you want to save that cash flow, great. Put that somewhere in some kind of savings. And do what you can do to increase the equity in your property and keep adding properties. One of my clients started investing in his 40s, I believe, and he's in his 70s now, and he's got somewhere between 40 and 50 properties. And these aren't small properties, these are big properties. I don't think he's probably got, I bet 50% of those properties are worth more than $1 million. I know some of them worth multiple millions. He just keeps buying properties all the time, and that's all he does is invest. He does not have a job. He doesn't have another business. He's also a builder. I mean, he builds some of his properties.
Oh wow!
But if somebody wants to lease a property and he can't find it, he'll build it for them. So,
wow. Yeah, that must
lease it to them.
Yeah, that's a good background I have when it comes to the commercial side, right? And kind of on that note, for people that want to get into investing in commercial real estate, because I know it's on the residential side, these topics have been it's almost beaten to death over people. Like you can invest without money, you can do this loan, hard money, private money, whatever.
Yeah.
For commercial, do you actually need money to invest in commercial real estate, or can somebody start immediately, or do they need to save up?
Yes and no. It's going to take some money. There are properties out there that you can buy with no money down. I always warn people against financing 100% of their property, because if you get into negative cash flow, you're going to get in trouble. And you really don't want 100% of your property financed. But there are some cases where you can do it if you do it the right way. I did buy a property one time where I bought the property with no cash, and what I did was I had the seller finance the down payment, but they only financed it for me for 6 months. In 6 months, I paid her off, and so I had cash in then. Just didn't have the cash at the time when I bought it, and I didn't want to miss the property, so we worked that deal out to where I got it that way. And you can do things like that. And there are some other things you can do. Basically, all the different techniques of buying a property that you can use on a house, you can use on a commercial property. Your lenders, the conventional lenders, are not going to be as open to that. Although if I come to a bank and I say, hey, I've got this property I'm buying, and they're willing to finance 70% of it. And I say, well, I've got the other 30% taken care of. They don't necessarily care all the time if you paid cash out of your pocket or if you seller finance that with the seller. And I actually had one tell me that on that deal. He said, well, I don't really care where you got that other 30%. As long as we have the 70% financed through us and it's the first lien, then I don't care where you got the other 30%. So yeah, you can do that. But if you, depending on what kind of property you buy, when you buy a property, you're going to have to pay for an appraisal. And commercial appraisals aren't cheap. What's a residential appraisal these days? About $1,200, something like that. Yeah. Commercial appraisal is going to run you $3,500. And for a lot of reasons, one is that in the market I was in, where there were 350,000 people in West Texas, there were only 3 commercial appraisers out there. So, and they were very busy, and they were having to call people from out of town to do appraisals. So that's one reason. Also, environmental studies. If you're buying anything that has any amount of land, or if you're buying an industrial property, you absolutely want to have an environmental study done. That's another $3,500. So, there's some money involved. You have to have some cash.
Yeah. And
sometimes you get lucky. Sometimes the seller had already done an environmental study, and it's not going to cost you much to you can get a copy of their environmental study and just do your study back to when have the company come out and do an update on it, and you can get out a lot cheaper. And then surveys, commercial surveys, they're a lot more expensive.
Yeah.
So, so yeah, you're gonna have some money somewhere along the line. You're gonna have to have some money. Yeah. That's why on my logo it says no hype, no BS. And that's what I'm talking about. I don't push the idea that you can get into real estate with no money, no credit. You're gonna have some money and some credit.
Yeah, that makes sense. And I guess because it's commercial real estate, like you said, it's based more of it's definitely like an asset-based loan, right? For commercial real estate. So sometimes, would you say it's actually easier to get in?
Yeah, it is easier for me to get financed on a commercial property. It's more based on how much income the property is going to generate.
Yep.
So they're not looking necessarily at what you make. They're looking more at, they do look at that, but they're looking more at what's the property going to generate. And so that makes it easier to get the financing done. If you have a property that the banks like, if it's like banks like storage facilities, and they like usually multifamily, unless it's, the market's oversaturated or something. But yeah, if you have something like that, they like those kind of properties, and it'll be easier to get the loan with that.
Yeah. I mean, is there, and kind of for people listening that want to get into the commercial space, right? So is there kind of like an ideal range of income or savings that somebody should have to start kind of considering this? Or
not necessarily, but what one of the best properties to get into if you're just starting,
right,
is if you can find a single tenant office building, especially one that used to be a house that's been turned into an office. Those are pretty cool because they're usually cheaper, and you can start off small. And that's what you want to do. You want to start off small. You can usually get something like that for $200,000 or less, about the cost of a house. And with a single tenant office, you can do the triple net lease that I talked about, with the tenant paying all the expenses. And you'll end up, you can clear, I don't know, $800 or $900 a month on something like that. And that's pretty good that's a lot more than you'll clear on a house, on a residential rental. And you get your foot in the door as a commercial investor. And those properties, they're pretty easy to get a long-term tenant. If you get good tenants for those are like insurance agents, hair salons, uh, dentist offices. Those are the people they don't like to move. Once they get into a place, they don't like to move, especially the dentist and the hair salon owners. Um, they have to put in specialized equipment, plumbing and stuff. And once they get it in there, it's expensive to move. So they don't really want to move. They don't have to. So they'll be long-term tenants. And, the insurance agents, they like being in the same place. People get to know where they are, and, they build their business based on their location. They stay for a long time. They're stable people, in other words. And so those are good tenants for that kind of property.
Yeah,
And that's
and
how I got started. I bought one of those. It was a house that was turned into a doctor's office, and so I bought that pretty cheap, and leased it out. Had the same tenant in there for 5 years. Which brings up the point of commercial leases. They're longer leases. If you are a residential investor, and you're tired of people doing a 1-year lease and moving out, having to get a new tenant every year, go to a commercial property, because the leases are much longer. They're at least going to be 3 to 5 years, um, and sometimes even longer, depending on the property.
and would you say that's like the best type of commercial real estate assets to get into, or is that just the
I
best
think for
to?
a beginner it is. Now, you don't have to start there. If you have a lot of cash, I know beginning investors that have $300,000 or $400,000 in cash, but if you've only got, 20 or $30,000 in cash, then that's a great place to start. And you don't necessarily have to start by yourself. If you have somebody you can partner with, to get started, just to get started, you get that relationship built with lenders and real estate agents, and get a track record going, that they start bringing you deals, and you don't have to look quite as hard
Yeah.
as when you first started out. Um, but there's some people out there with a lot of cash, and they don't know what to do with it, and it's fine to start with a bigger property.
Yeah. And it's just like, in your opinion overall, right? So like, not considering the how much capital you have aspect of it, but just overall, what's like the best type of commercial real estate, right? Either, multifamily, hotels, storage units, or
Um, Overall, I really like the idea of storage units.
yeah.
And it's it depends. It's very market dependent. Around where I am right now, in the Austin area, in Williamson County, there are about 170 HOAs here. And these HOAs don't like RVs and boats in your yard, so they don't allow them. And so all the RV and boat storage places are full with a waiting list. So if somebody had a new boat and RV storage here, they would do really well. And they're cheap to build. And usually you want them outside the city, so the land's cheaper. So it's a good thing to get into. It's easier to get into. And SBA will give you really good loan terms. You can get a really good SBA loan on storage facilities. Usually you can get like 90% financed, because it's a business. It's not just real estate. It's a business.
Yep. I think that's the big piece of it, is commercial real
Yeah.
estate. It's treated like a business. So
Yeah. Oh, it is. I have a course, by the way. I don't know if I mentioned that. So we're right on the verge of launching our membership site, called Real Estate Revenue, and in that membership site is a course, an 8-week course for beginners on how to invest in commercial real estate. And it's also, the membership includes live coaching and mentoring calls with me, and where you can ask questions about your deals, and get advice, whatever. But one of the things in that I teach is real estate is a business. Your property, every property is like a business, and you have to treat it like a business. You don't just buy a property and let it sit there and let it run itself. I mean, it kind of does, but there are things you have to do as a business owner. And it's no different with real estate. You have to treat it like it's a business.
Exactly. And we'll make sure to plug that in the show notes so that people can find them. And
Okay.
anybody interested will be able to actually reach out to you as well and find that
Yeah.
course
Yeah.
and sign up for it.
Yeah.
And looking forward, because I know we had an interesting conversation about this last time, especially regarding cryptocurrency and NFTs and commercial
Mm-hmm.
real estate.
Yeah.
So really interesting conversation. Could you just touch a little bit more on, the future of investing in commercial real estate and how
Yeah.
crypto and NFT plays a role in that as well?
It's going to change real estate investing
Yeah.
completely. So right now you can do passive investing in properties with uh, people that are doing syndications, and that's done a lot on apartments, large apartment complexes, where they will get their initial investment money from investors who buy shares. Basically, they're buying a chunk. They may get 4 or 5 people put in 100,000 each, and maybe they have a $10,000 minimum or something, uh, and that's where they get their cash, and then they buy the rest of the property with their financing, and then work out how they pay these people back. Uh, right now, tokenization of real estate is happening already. It's not happening as fast as I like to see it, but it is happening, and it's going to happen more and more as time goes on. We're going to see properties that will tokenize a percentage of the property, and investors will be able to buy uh, small portions of that property, probably for as little as $1,000, so that everyday person can invest in real estate and not have to do it all at once. You could do with several properties. There needs to be a marketplace for it, but I think what will happen is right now artwork is being sold as NFTs, even physical paintings. They will create NFTs, tokenize this painting, and you can buy a share of it. So they're going to be doing that with real estate, and it's been done a couple of times. There was a company, I can't remember the name of that company. They started that, but they didn't get very far with it. I don't think the technology was quite ready yet for them, but it's getting there, and I think it's ready now. It's ready for that to get started up again. So yeah, that's that. So it'll be nice. I mean, if you want to buy some real estate and you only have $5,000, you can still go buy it. And as far as if they do it as an NFT, I think we talked about before how you can write in your NFT that once you sell it, if it gets resold, you get a royalty from it, so that you can keep getting paid. So if you're the property owner and you're selling off portions of your property through these NFTs, you can get royalties on it every time it gets resold.
Yep.
And people would be free to sell their shares to anybody if they wanted to. They wouldn't have to hold it for a certain amount of time. There wouldn't be any restrictions on, say, holding it for the next 2 years or whatever. They'd be free to do it right now. So,
that's really interesting. That
yeah.
part of it is really interesting that you can write in a royalty for that.
Yeah.
Yep.
Yeah. Yeah, it's interesting to us because we're real estate agents. We're used to getting commissions, but we only get the commission one time. So that would be really nice if that can be written in like that.
Yeah. Create that residual income over and over again as it keeps on getting sold. So
we just have some barriers to get through, like convincing somebody who owns a property that, hey, you need to sell off half your property, in tiny chunks, and let me take care of that for you, or do it, buy your own property and do that. You have to convince your lender that, hey, we're going to raise the money by doing it this way instead of
Mhm.
the normal way. So, but yeah, that's coming.
Yeah, and that's interesting. You mentioned that last part is because I wanted to ask is there's a lot of people who might, it's a great thing that, the tokenization of real estate now can essentially get more people into the game with, with less
Yeah.
capital. But
Hmm.
what people like a big objection is like, well, how secure is that? Or, that you're essentially tokenizing the real estate. Like, am I actually investing in the land here? Or what if tomorrow, the grid gets destroyed by Russia or whatever, and
Yeah.
what happens then, right? So how would you handle that kind of objection?
You know what? I don't know. I mean, it's done through a smart contract. You know that you own the property, you own that much of the property. Um, so I kind of feel like if that happened, uh, if something bad like that happened, it would have to pretty much take out everything. Not, you know, I mean that. I mean, how does blockchain technology work? I mean, you can't just, I guess if you took down, the internet's designed so that it can't be completely taken down. So, um, I don't know that that would be an issue. I don't know that that would be a problem. I think that software is stored somewhere and it's going to stay there forever, most likely. But you know what? Uh, what if the courthouse blows up tomorrow and all the deeds are burned up and you have no way to prove that you own the
Yeah,
property? So there's always something like that to worry about.
right. That's a good
So yeah,
that's a good point. It's a good analogy, right? And
yeah,
it's, there's things are just gonna if a disaster on that kind of scale happens, right? It's
yeah,
money then becomes obsolete.
yeah,
It's a
exactly.
whole different conversation.
Yeah, yeah,
Yeah. And that's why I think, those who are looking to get into it should reach out to you and, maybe consider signing up for the course and getting educated, right? Do you think,
yeah,
as a closing, almost like a parting thought, do you think the biggest part of it is education and, the
yeah.
knowledge of it?
And in education and fear, don't let it scare you.
Mm.
Don't let the fear keep you from doing it. Well, heck, I did it. I mean, I uh, hang on just a second.
Mhm.
My battery's about to run down. Well, uh,
Yeah.
and I did it, and I didn't go out and get educated real estate, except what I learned from building houses and from my early mentors, and um, one of which was really good. And it was a guy back in the days when I was building houses, and he was a real estate investor, and he was in his 60s or 70s at the time, and started off as a mortgage broker, and he was now a commercial mortgage broker, and he got commercial money for people, and he made millions, and he owned about 100 properties around the state, and he taught me a lot. But that guy only had a fifth grade education, and so somebody with a fifth grade education can be a commercial mortgage broker and an extremely successful real estate investor and make the kind of money that he made. And why should anyone fear being a real estate investor? You can do
Yeah.
it. And my education that I have has absolutely nothing to do with real estate. So it doesn't matter. You don't need a license. You don't need a diploma from anywhere. You don't need to even be all that smart. You just have to be willing to go out and get started in it and do it.
Yep.
So
It's the real estate.
have to
It's
have the
the
will, have to have the will to do it.
Yeah, yeah, love
So,
that. So it's the great equalizer, and it's up to each individual to go out there and actually put in the effort. Right? There's
yeah,
no secret sauce. There's no
yeah,
shortcuts. If you put in the effort, then you can reap the rewards. So,
yeah. That's right. Exactly.
yep. Well, Thank you so much, Paul, for the
Okay.
conversation today. I mean, I learned a lot, and I'm sure our listeners did as well. So, as a closing, and so what are some other ways that people can reach out to you, either social media, email, or directly, aside from just, of course, in
Um,
your podcast?
let's see. I guess you could find me on LinkedIn.
Hmm.
That would be a good place. And the podcast also on the like I said, our membership's going to be starting here pretty soon, probably in the next couple of weeks.
Hmm.
And there's going to be a community access. I think I put the
Oh, wow.
link on the information I gave you. It's going to be at community.realestaterevenue.com. And that is a community platform. It looks a little bit like Facebook. It's not Facebook, though. It's a private platform. And you can go in there for free. It's going to cost you an email address. That's about it.
Right.
So you can sign up for that, and it's not up yet. So by the time this episode gets out, by the time people can hear this episode, it will be up.
Mhm.
Um, so I would start there. You can go there, and you can speak to me directly through that. It's almost like well, it's just like a Facebook group. You can post messages, post questions, answers, opinions, comments, whatever. And and then that's going to be part of the part of the actual membership, but it's that's the free portion of it where you can actually get in and look around.
Yep. Awesome.
So
Awesome. Yep. We will leave all of that in the show notes below. And so
okay,
you guys have a way to get in touch with Paul and be a part of that community. I think I'm gonna sign up as well just to check it out and learn even more about the commercial side of real estate as well. But um, thank you again, Paul, for being a guest, spending some time with us on the show today.
thank
And
you for inviting me. It's been fun.
yeah,
Enjoyed it.
no problem. No
Yep.
problem. Yep. I enjoyed it as well. And for those of you looking to get in touch with Paul, definitely take part in his community, sign up when it's up, and take a listen to his podcast as well for more information. But other than that, guys, if you thought that this episode was helpful and you think that other people can benefit from this information as well, feel free to share it with a friend or family member or just somebody that that you can think can benefit from it. Give it a like, share, subscribe, and leave a review as well, and leave us your thoughts. But other than that, guys, thank you, Paul, again for being on the show, and thank you
Thank
guys
you.
for tuning in. All right, take care. We'll see you on the next episode.